Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq 100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Monday afternoon, we have Chris Dearborn, managing director on Nasdaq's market intelligence desk, for an update on technical levels to watch in the Nasdaq 100. And, a pretty tough day out of the gate for the index, down 2.5% on the session. Of course, Chris, traders are asking themselves, is the summer rally starting to lose steam? We have Jackson Hole this week, right? And then we start to come into that seasonal volatility time of the year in September.
Right. So we have seen stock earnings take the place of this Fed rhetoric following the last meeting, which is good. Even with the lower bar, you're seeing 75% of the companies beat. What you're looking at is still a few of the retailers coming out in the Nasdaq 100 this week, and as well as across the broader market. So you're going to see that tail end. What's going to be interesting is how they talk about inflation, consumer spend, and inventories. So you've got the tail end. You've got 88% of the S&P reported, about 90% of the Nasdaq 100 reported. So it's going to be interesting the next couple of days. News cycle, as you said, is going to be light until Friday. Chair Powell's scheduled to speak on Friday, so we want to see what that rhetoric is, as you referenced before. But the good thing is that when we mentioned this last week as well, that you've got another full month of consumer inflation data to come before the Fed actually makes their decision about what they're going to do. So 1 month isn't going to change the rhetoric, whether it's a half a basis or a 3/4 point cut. What you want to see is 2 full months, and the non-farm payroll report, the jobs report, was very strong. So you still got the mixed message there. The summer rally was nice. We had 4 weeks of higher highs that snapped last week, with the index finally declining, and today definitely a big gap lower.
Yeah, it was interesting. It was like the past 4 weeks, the market was trading as if the Fed was positioning itself to become more accommodative, but really nothing has changed in what they've been telegraphing. So, Chris, let's take a look at your first chart here with some fresh technical levels to watch on the index.
Yep, absolutely. So we gapped lower through support this morning, which is kind of a very bearish tell in the index. We're sitting at 13,225 following Friday's sell-off. That's a 38.2% Fibonacci retracement from the June lows. Resistance right now is going to flip over. So support is going to be the 100-day simple moving average of 12,745, with a tight support level right below that, 12,689. Resistance is going to be at 13,083, but ideally it's going to be tough to get above where we opened today, 13,056. That's not going to happen today, but that's the target there. Ideally, we're going to be range bound here between 12,750 and 13,200 moving forward.
All right, and let's take a look at the last chart here with the constituents moving the index.
So it's gotten a little bit worse. We're selling off into the market into the end of the day here. Really, we're trading at the worst levels of the day right now. Of the 100 constituents, there's only 5 that are in the green. Everyone's in the red. Tech is getting hurt here on valuation. Though trading volumes are a little bit lighter, as you would expect for an August Monday. So even though the move down is significant, it's really on nothing new that has changed from last week to this week.
All right, Chris, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.